The Consumer Electronics Show is kicking off in Vegas today, and it could actually be one of the more exciting ones in years. AI is expected to show up in nearly everything from robotics to vehicles to wearables, even healthcare. Whether you think we're in an AI bubble already or not, its proliferation this year can't be understated. Here now with the themes he's watching is Sam Lessin, general partner at Slow Ventures. I don't mean to make you sound like a gadget guy, Sam, which feels like often the CES kind of talking points from 10 years ago. But in a way, people should understand what's happening and connect the dots back to the market action today. When people say, why is the Dow up so much? Why does this have anything to do with Venezuela? No. The AI trade and the data points, whether it's from memory, from compute, that this is going to require. I mean, we're starting off this year already with articles about how much more we need, how big the hunger, the thirst really is.
We'll see. It'll be an interesting year. I mean, last year was no question a narrative-heavy year, right? People are selling an incredible dream, and the dream of AI is so big, right, and so asymmetric, people are willing to invest almost infinitely to potentially capture it so far. This year, we'll see whether the dream continues to grow and get bigger and propel a lot of the things we're seeing, whether data points start pointing to weakness in the dream. Like, this will be a really interesting year in terms of how it plays out. It's kind of one of those things where we could be massively up. The dream can stay intact or not. It'll come down to a big year.
I mean, you look at companies very early stage. There's no way this can be over if we haven't even really seen these startups coming to market yet.
Maybe. I mean, the reality is again, I think on one hand, the idea that from an AI perspective that you're a startup and not leveraging AI tools in what you're building is crazy at this point. It's kind of it's kind of the equivalent of someone says, I'm not using AI. It's the equivalent of saying I'm not using the internet or cloud. Now, the question of how do you make money on it and where's the leverage and how do the dynamics changes? These are all like real questions to be answered this year. And I think no one really knows is the upshot. We know it's disruptive. We don't know how deeply disruptive, and we don't know where the money's made.
Right. No, and obviously. I mean, and that's kind of what makes it fun on some level is you think, well, there's still money to be made instead of just saying, no, it's all over.
Maybe. I mean, that's the question is, right now we're in this crazy place where, Washington has a debt problem and needs GDP number go up. Wall Street obviously has an incentive, with all sorts of new financings and ways to get involved in kind of the trade. Tech has its kind of like long-term story. So everyone's aligned in wanting the narrative to be big and important and real. And you see things that consumers experience and get really excited about. This is all good. This all drives the trade forward. People are clearly going to keep going. But we're also at a place where people have now been using versions of this in the enterprise for the last 12 months. You start to connect the dots of does this transition from experimental spend to core spend? And when it does, who actually profits? Where is the actual margin in the overall shift that's going on here? It's possible there's a lot for startups. It's possible there isn't. And there's all sorts of tack-on effects about obviously job creation, et cetera, that we all have to figure out.